The good news is we've hit all of our financial targets. We hit most of our strategic targets ahead of plan. We set out 3-year plans 2 years ago. Most of them were nailed in 2023. The rest are going to be done very quickly, if not already. Good set of results, good strong growth, and we look to that growth to extend. So we've got a 5 to 7% income growth range for the next 3 years. We say we'll be at the top end of that range in 2024. And we're going to do that with an ongoing focus on costs. You know, maybe the most encouraging thing is that we've had really very strong asset quality for a half a decade now, and that's through COVID. And that hasn't always been the case in a lot of the emerging markets where we operate. And we think about some of the things that have been going on, China real estate and debt restructuring, to have very, very low levels of loan impairment is encouraging. So all in all, we get to into double digits on return on tangible equity, and we're going to keep on going from there.
And I think that's the key point. Look, some people would have liked to see higher rates going forward as well. There's a big range between what the best in class and the worst in class in the sector. But given that the road is still pretty much intact, I know we can argue about the decimals, it's pretty much intact despite everything that's going on in China. You've got to be pleased with that, and it shows how the diversified model is working. But how concerned are you? You've got Bohai problems. Noel Quinn was talking about BoCom in the last 24 hours as well. China's just not recovering, is it?
Look, China grew 5.2% in GDP growth.
Did it?
Yeah, that's not a bad number.
Are you sure it grew 5.2%? Because that's an official figure, Bill.
That is an official figure.
And I see a lot of bad trade data. I see a lot of unemployment data. I see a lot of things that don't add up to 5.2%.
First of all, maybe give the headline for Standard Chartered. We set the target 2 years ago of doubling our profit in 3 years. We are $100 million short at $1.3 billion of doubling in 2 years. All right, so this is very good growth for us in China. Why are we growing despite the fact that GDP growth is slower than it has been? Hey, I'll wake up at 5.2% growth and feel okay about that in most countries. But our job is to connect China to the rest of the world. As the domestic economy in China is a little bit slower, and it is a little bit slower, right? Our onshore business is growing in mid-single digits. It's growing, but mid-single digits. China looks out. So internationalize the RMB, open up their capital markets, cross-border trade, huge reconfiguration of supply chains within Asia, from China to the rest of Asia, Middle East, Africa, et cetera, and it's going both ways. That's our job. We do it well, and we double our profits. Okay, it's so good. What's going on in China? I think China is in fundamentally good shape. Now, you and I'm sure I've got a whole clique on age ahead of you, but you know, we grew up during times when the US, the UK, Japan, China went through major transitions from kind of old industrial economies to new services economies. China's going through that right now. Now, when you and I went through this in our good old days, we had massive recessions, financial crises, social dislocation, inequality, nightmare. China said, we're not going to do that. We're not going to do it that way. We're going to be a little bit more deliberate about how we transition. I spent a week in Guangdong province, so Guangzhou and Shenzhen in the fall. Visited all the EV manufacturers, the EV supply, electric vehicles supply chain, the battery makers, the components. I mean, it's booming, absolutely booming. And it's the same in everything sustainability related to turbines, the solar panels. So you know, you've got and then of course services are picking up, and the consumer is picking up in China. So new economy stuff, good. Old economy stuff, mostly real estate, not so good. And we took our pain in that, quite modest in the overall scheme of things. Is China going to come out the back end of this? Yeah. China's going to come out the back end in good shape.
Can I add to the not so good being the geopolitics? And there's this McKinsey report that the FT's been flagging today that McKinsey has supposedly advised China to deepen its relationship between business and the military, which we know has not gone so well in terms of some of the sanctions that have been applied, in particular to chips. What happens later this year if we have another Trump administration? Do those geopolitics again worsen, making doing business in China more complex for Western companies?
It's very hard to say. I mean, obviously, Trump in the first round was quite unpredictable. And I'm not sure that that's the best way to have an impact in terms of your geopolitical objectives, but you know, I'll leave that to presidents to decide. You know, there was the thought that Biden would be somehow gentler. Well, he's not been gentler at all. I mean, Biden and Blinken and company have turned up the volume significantly in terms of, but they've done it in a predictable way. And I won't say predictable in the sense that there were no surprises, but it's been a steady increase in pressure. I think they flagged very well the considerations. I tend to think that's a better approach in terms of getting results, but who knows? Time will tell.